Okay, so syndication, advantages. Low entry barrier compared to property purchase. Now, here in this case, let's say you buy something in Toronto, as we said, you need to put a couple of $100,000 just as a down payment. In the syndication, it really depends on the project sponsor. Some companies do differently. I've seen a minimum of $500,000, but also seen minimums of $25,000. So it really depends on the project. But still, it's typically lower compared to buying something, okay? You don't need to get a mortgage, right? When you buy, let's say you want to buy a condo, right? You need to go and apply for the mortgage. Sometimes bank says, well, no, right? You don't make enough money. In this case, you need to do some qualification, but you don't need to get a mortgage in your name. The liability is limited to investment in a deal. So when I talk to investors and people ask me what's the worst can happen, I always tell you, you might, not going, you might lose 100% of the money you invested. But understand, this is where your liability ends. If something goes bad, all you're going to lose is money, which is painful, but nobody can go after your personal assets, okay? So that's the liability. Potentially high return investment. Well, I'll just show you one example. There are many, many companies doing that. There are many companies in Canada and US, so there are very good opportunities around. You know in advance where the funds are invested along with the risks. So compared to MIC or compared to a real estate investment trust I showed you before, they decide where the money is going. Here you know the project, you look, you see if it's suitable for you, for your risk level, for your risk tolerance. You decide to invest or not to invest, but the decision is yours. Potentially can be purchased inside registered plan. So that's for Canada, and this is actually what we're doing with Oikoi. Some people ask me if we do the project with Oikoi, during the break, and I said we do, and we actually created something unique that in those types of projects, it's actually possible to invest inside RSP or RESP or TFSA, and then when the project is over, when we exit the project, you don't need to pay income tax. How awesome is that? Now this is only for Canada. For US, we don't do it, and there are some options to do, but very few companies do it. So mainly for Canada, that's why I say potentially, because the project needs to be in Canada and needs to be structured very specifically, which is not a simple process to do. Now, disadvantages. Highly illiquid, must stay invested until the project is completed. And I can, bring you many examples, but let's say some of our projects got delayed because of COVID. So people invested for 2 years, that was our plan, and because of COVID, it's been 3.5. We're exiting some of those projects only now. So you need to understand, never invest with your last money, the money you might need tomorrow, okay? And outcome depends on a single project sponsor. Again, hit and miss. We'll try to do as many hits as possible, but you never know, right? With any company. And this is concentrated, not diversified investment, because all your money goes into one project, okay? Joint venture. This is also a spin-off of syndication. Now, the difference, for the purpose of passive investing, the difference between joint venture and syndication is that there's only one person investing all the money instead of multiple. So let's say there's somebody with $1 million and somebody needs $1 million. One person comes, they create a property, a project, they establish the company, so there's a general partner, and then there's the joint venture investor. Now, in Ontario, there are many smaller deals, especially rent-to-owns, that use the joint venture model. So the model typically is that the project sponsor finds the tenant buyers, finds the deal, and then somebody comes and puts the money down, also needs to apply for the mortgage, right? And normally the profit is split 50-50. I've seen 40-60, but typically the profit is split 50-50. This is a little bit outside what I'm showing you. The idea of general joint venture here is just somebody comes with a large amount of money and pretty much invest all of it into one project. Now, some syndications or some syndicators are able to accept mortgages. Not many of them do, but some do. And the difference is COVID is an amazing example. When the project gets delayed, people who become partners in the project, they just need to wait until the project is over. For good or for bad. There are sometimes delays, sometimes you do the end of schedule, but there are delays. When you do a loan, the loan has a beginning and the end. So not many project sponsors are willing to do or take the loans, but some do. Okay? So you can invest in mortgages inside of syndication. Just keep that in mind. If that happens, normally you will be in the second position along with other investors, and it's also called mezz debt or mezzanine debt. Okay? But you all go on title together in the second position. The first position is typically by the bank, the company that funds the construction loan. Okay? In most cases, several people lend the funds together. Now, all lenders register on title together in the same position. And this is your protection. This is your security. You get a paper that says you're on title. So when the project is over, the project sponsor cannot take the money to himself or the equity partners until your loan is repaid. Okay? So that's an option. If it's something you might consider, if you want to be part of a large project but with less risk, this is something you might be willing to do. And again, some syndicators are doing it. So Ronnie mentioned that we just closed. This is our last deal. We just closed on it in September. And this is the project we actually brought. Again, I'm showing it just as an example. So we brought several people. I did not even advertise it because the deal was so small. This is a hotel in Lake Placid, New York. The property was appraised at $2 million. We were able to buy it at $175. So the seller actually did something called VTB, or vendor seller back. They're going to hold the first mortgage for some time. And we needed a little bit of money to bring additionally from investors just to close on the deal. So we closed 3 weeks ago. As you can see, it was $600,000 that we needed. And the interest is 17%. But this is a loan in second position. Now compare that to the mix I showed you, right? The mix is paying 8, but in some cases those are first mortgages. So again, you want more security but less income. You're more, risk tolerant, but you can get much better returns on your investment. Funds. So I'm talking about the funds that invest in real estate. Unlike real estate investment trust, this is the funds that invest typically in projects. So they pool funds to raise money from investors in advance based on the predefined strategies. So sometimes they've got deals, but normally the funds say, okay, we want to buy 150 homes, or we want to buy several hotels, let's say in California. And then they start bringing money in. Okay? The commitments are gathered into a single fund entity, and the manager decides on where to invest according to fund's mandate. So there's somebody who manages the fund. You look, you like what the fund is all about. You put your money, but then typically you don't know where your money is going. The fund manager is going to decide which property to invest in. Funds are similar to syndicate in structure, but have an additional layer of ownership. Let me show it to you. If you remember, I showed you syndicate. There was a property, then there was a company, right? And then general partner and limited partners. In this case, with the fund, let's say this fund wants to invest in 3 properties. So they create a special company, an additional company that owns the project. Okay? So that's the difference between syndication and the fund. So there's an additional layer, okay, of entities. So this is an example. Earlier this year we exited one project. So we sold the land to a group, and they decided to partner up with the fund. So I wanted to see what they're going to do with our projects. Got curious. So this is what they offer. They say, come guys, invest with us. Our project, and there's several other projects. So they say, okay, we're going to open it for investment, which is pretty much right now. I'm not going to tell you who they are. Right? This is in Phoenix. Now, the minimum investment is $100,000. They're looking to raise $25 million overall. So again, you're part of a large pool of investors, and you don't know. Well, you know about some projects, but you don't know exactly which project is going to go to. They request a minimum of $100K, but if you pay more money or invest more money, they're going to give you more preferred return. So $100K, you get 7%. $250 gives you 8. $1 million, if you've got one, you get 9% preferred return on investment, plus some appreciation. Okay? So look, they advertise that you're looking to get between 14 to 18%. Obviously, it's not guaranteed. And after the preferred return is paid, they're going to split the profits 70-30. Okay? Now this is closed fund. What does it mean? The moment they raise 25, they don't accept more funds, but also until they exit, you cannot take your money out. Okay? So keep that in mind. Now in this case, they want to they want to hold it forever because that's going to be income producing project. But keep in mind, so you say bye-bye to your money for a long time, and if tomorrow you need it, you simply cannot take it back. Okay? So it's a very good option. Also has advantages and disadvantages. So let's talk about the advantages. Low entry barrier compared to property purchase. So I mentioned, you see this guy's median was 100,000. With us it's 50. And I've seen as low as 25. Some companies go way more, but again, depends on the company. You don't need to get a mortgage. Liability is limited to investment in the fund. Again, whatever you put in the fund, that's worst case scenario. That's what you can lose if things go wrong, right? You need to understand that. It's not guaranteed. Potentially high return investment, it allows you to diversify between multiple properties or projects. So the fund I just showed you, they're going to do 3 deals with the money pool. This $25 million, it's going to go for 3 deals. So at least you're diversified. Potentially can be purchased inside the registered plan. Again, as I previously mentioned, that's the case for Canada, not for the United States. Disadvantages, highly illiquid. Years. You need to count for years to get your money back and profit. Could take a very long time to raise all the funds until place. So this is a point I want to address. It obviously takes a lot of time to bring $25 million, right? So what the funds typically do, they create something called promote. So people who go first in the fund, they normally would get an extra couple of points or percentages, okay? But their money doesn't start working immediately. You need to wait until all the funds are raised. Keep that in mind. So these guys just starting to raise, the funds this quarter, it might take them a year to bring all the funds in. And if you go first, you understand the funds, that your money are not going to start working until they start construction. But you might get something additional from them. You don't know where the money will be invested. Normally you don't know what the property is. And they also charge multiple fees by the fund. So it's an additional layer compared to smaller companies. And the fund manages, there's additional layer of work they need to do, additional level of paperwork. So they charge a little more for what they do. Okay, and the last option is something new. It's called crowdfunding. And that's something unique that just started approximately 2015. It's gaining ground. So technology companies thought, what we can do to raise money, right? So what they do, they get permits, they get approvals from regulators, and now they can advertise the deals online. So the idea for them is to take a little bit of funds from many, many people. For example, Ronnie and I, we're not mass market company. I always tell investors we're not going to go to thousands, right? Because there's only so much we can do. But these kind of companies are completely opposite. What they do is pretty much, you give me 100, you give me 500, you're going to invest in real estate. How about $10? This is the lowest I've seen. You can invest $10. Now, if you're going to invest $10, you're not going to retire tomorrow. Okay, I promise you that, right? But you can. And if somebody comes to you and says, yeah, but if somebody comes and say, hey, I just bought a property and I'm a real estate investor, you can do the same with $10 and say, I'm also a real estate investor. So that's an option. So it's typically used as a marketplace for deal sponsors and investors. In some cases, like rarely, but in some cases, crowdfunding company acts as a broker. But in some cases, they can say, you know what, we're going to take this deal, we're going to bring the money, and we are going to be part of the deal. So that's what I want to show you. Now, keep in mind, this is still very, very new, involving options. Things might change. Whatever works today might not work tomorrow, vice versa. So keep an eye, but definitely it's very, very growing opportunity for many, many people. So obviously, I went online to see what's available. So 2 options here. Option number 1, this is the company. This is a project sponsor. Probably needed more funds. It's a large multifamily deal. And he went to one crowdfunding site and started advertising. He says, guys, come invest with me. Target cash on cash is 5%, but potentially we're going to make 17%. Now, they're just publishing the deal. People look. And if people decide to invest, here you go. Now, the crowdfunding, they do some due diligence on project sponsors, but eventually it's your decision and you're responsible for the money you invest. Now, the deal on the right, it's called Malbec. Nice name, but it's only one house, right? And this is the company. I gave you an example of $10. So there's, as of now, 255 investors that together put $137,000, and it's only 86% funded. So how about owning a house along with 300 other people, right? You still can say I own a house, but again, keep that in mind. It's a very good option, new, but allows you to enter into real estate investing without big amounts of money. So for crowdfunding, the structure is going to be, and I'm talking about the crowdfunding, the company that decides to participate in the project. So let's say if it's a big project, say they need to bring $25 million. So they got their own investors. The investor brings $10 million, and they need additional 15. So in that case, they go to the portal with the crowdfunding company. The company brings the money in, and then they're going to create an additional entity that is going to invest alongside with other people into the project. Right? It's very interesting. So the advantages. Well, extremely low entry barrier. Like, cannot be any lower. Maybe one share of ETF, but that's it. So you don't need to get a mortgage, obviously. Well, if you do, real estate investing for $10 is not for you, for sure, right? Liability is limited to investment in a fund or on a project. Potentially high return investment. Diversification between multiple property projects. So you can invest as many deals as you want, $100 in each. You're completely diversified. Potentially can be purchased inside registered plan. Now, I looked into some Canadian crowdfunding. There are some companies that started doing that. I know you looked into that, Rosalina. Did you find RSPs? An option to do with the RSP? Do they offer that?
Not that
I didn't see it either. So potentially, that's why I said potentially. It's not available as of now. Might be available in the future. Well, disadvantage is highly liquid. Again, similar to the project. You're part of the project. You cannot leave it. The outcome depends on a single project sponsor. You invest in one project. It's concentrated. Crowdfunding company is a broker. Deal outcomes is not important to them. So in most cases, just they charge the fee to the project sponsor. They charge some fees, take some money from you for what they do. They walk away. And then you need to deal with the project sponsor, whatever is going to happen with the project. And they charge everyone for what they do, rightfully so. So 5 options. I hope you feel a little bit more knowledgeable compared to 30 minutes ago. At least it's a summary of what's possible. There are many options to invest in real estate. Not a single option is fit for anyone. Just select what works for you, understand what works for you, decide on that, and act. And just you can simply repeat what you're doing, right? But if mortgages is for you, just invest in mortgages. If investing in a fund is something you'll be interested in, just invest in funds. You can combine as well. Now, real estate investing is a marathon, not a sprint. You're not going to be rich tomorrow, especially if you invest, $100. It takes time. Not every project is going to be slam dunk like the one I showed you with the developer bought the land for 5 and sold for 12. There are deals like that, but it's rarity, especially for the passive investor. So build yourself some time, allow several years to achieve the goals that you put for yourself. Find is what working for you and repeat until desired income is achieved. And listen to opinion of experienced investors who achieved that already, right? That's the biggest thing I learned. And I talk to so many people. Well, today, after doing for many years and talking to investors, less people say no to me, but I still get no's, which is completely fine. And I know it's hard in the beginning, and it's also hard to go against the crowd, because what you're going to do, the opinion of people is very strong. Many people show their opinion without having any experience compared to what you're going to do. So what I'm saying is, listen to them. They're still going to be a friend. But in the end, go to people who understand what they're doing. Go to people who can educate you. Go to people who can teach you and show you the way how it's done. Okay? So just remember, 5% of the world owns 95% of all the money. How crazy is that, right? Obviously, they know what they're doing. You need to learn what they do. Just copy. That's as simple as that, right? They do something different. So I started with the sport, and I want to bring the sports analogy. In any arena where the sports are played, there are players and spectators. So spectators have nothing to do with the real game. They boo and cheer, but it doesn't move the ball to the goal. So what I'm saying, don't sit, don't be a spectator. Just decide what you're going to do, act on it, and your life is going to change. So don't listen to the crowd. Now the last thing, obviously I want to show you more basketball. Now, this is something, the game, actually I watched live, and I'm going, well, I watch most of the games live, but this is something I probably will never forget. So this is Toronto Raptors playing against Washington Wizards. It's in March 2007. There's 3.8 seconds left, and we are losing by, it was 3 points actually, not 2 points. Anthony Parkin is going to inbound the ball. Less than 4 seconds, he decides to throw the ball to the other half. The guy from Washington intercepts that, and he thinks the game is over, puts the ball high in the air. Let's take a look what happened. That is so amazing, guys. So, by the way, we got to overtime, and we won that game. So, what I wanted to say is never give up. Now, some people came to me. I know some people just starting. Some people so experienced in what they do, and probably went through many hoops. Now, we're in a different environment, very difficult environment now. But understand this, deals can be made in any environment. You just need to adjust. So please, learn and take action. It's going to be tough. Not every day is rosy, but there's a better day tomorrow, so just never give up. And I hope in a couple of meetings, some of you will come and tell your success story here. To success.